Welcome to the Aro Benaiah Show, the podcast that dive into the mind of blue-collar entrepreneurs and hands-on business leaders who build success through hard work, grit, and a hunger to grow. Today's guest is Leanne Ozaine, a straight talk and profit expert who help business owners never worry about money again. With over 20 years of financial experience and a career that include working with Dave Ramsey, and entire leadership program. Lane bring a rare mix of hormones, honesty, and or hard-won wisdom to the world of business finance. After making the millions of dollars in revenue and ending up broke, she turned her collapse into a breakthrough, creating the two-number method, a simple, powerful approach that help entrepreneurs find hidden profits and break free from financial stress. Today, we'll unpack the money psychology that impacts business, why traditional advice keep most entrepreneurs broke, and what is really to take to run profitable business without losing your peace and passion. It's really a pleasure having you on the show, Leanne.
Thank you so much. Pleasure to be
Yeah,
here.
yeah, thank you. So, Leanne, what was it like growing up for you?
Growing up for me, good question. I actually grew up in a very conservative family that really truly believed that it was wrong for a girl or a woman to get a college education or be employed outside of being a homemaker. And I never really believed that that was the calling for my life, even though that was how I grew up. And to this day, I'm the only one of my sisters that has a career outside the home. But I will say this, there was a definite, I always tell people that what we learn about finance was either taught to us directly or we caught something. And what I mean by caught is something that we learned by observing. And so in my family, I was taught that a man would be the provider for my family. And what I caught was that my dad wasn't capable of providing for our family. And so from a very young age, I knew that I was going to be a person or a woman who would have her own money and have her own business and have a lot of her own. So what I can honestly say is that as much as I don't really respect the way that I was raised, I have a lot of honor for what I caught because it helps me every day in my profession. And as I work with people around their business finances, specifically business owners of all shapes and sizes from all different industries, this story is true for a lot of people, that what we were taught is one thing, but what we caught is another. And for most business owners, they go from just being a normal person to now owning a business, and they had no education on business finance. And so that conversation of caught and taught is relevant. And I'm guessing it's relevant for your audience as well.
Wow, this is really, really amazing. The fact that the stereotype where you were growing up didn't later become what is being dominant and what you do. So what actually inspired you to break free from it? Was there earlier mentors who actually mentors you, or more like a mentor figure that you actually more like see that make you say, no, I need to cut something different from what this stereotype is? What changes while you were growing up that made you take on that route?
I think it was really as simple as knowing that the practical side of this father of mine can't provide for our family. We don't have enough money to buy groceries. And being a young lady who was working to just basically pay for my own clothing, that kind of framework in a family made me very independent. And so as an independent human, I found myself really drawn to entrepreneurship because when I finished college and I entered the workplace, I found that I just didn't fit. I was so independent that it really became clear to me when the first problem that I tried to solve in the world with a business became clear to me. I found myself saying, I can fix this problem in the world. And so I found myself starting businesses. And so that independent streak works really, really well for most entrepreneurs. And I'm no exception. So that was really the mindset. It was that independent grit and drive that made me take a step in a different direction, from getting an education to owning businesses, both.
That's pretty amazing. It's even the fact that why you're looking into entrepreneurship. I could wonder what your mindset would be there. It will almost be a bit contradicting. Say, Lane, why will you go through this route? This should be for a man. It's really amazing. You're able to kind of break free and actually want like look different. So Lane, your story starts with a painful truth. You made $1 million and ended up with zero profits. What happens and what did that moment actually teach you?
So I was somebody who was a lot like your audience with my very first business. So in 2008, I was running a multi-million dollar business and we looked really good. We looked like we were killing it. And the reason that it looked like that is that we had all this money coming in. We had a great team, we had great staff. But what was happening is I was doing the thing that I now coach business owners not to do, which is applying finance principles of personal finance to business. That is number one. That can get people in a lot of trouble, especially if they don't have a financial education. But really, I was believing some of the paradoxes that we'll talk about today. So, what I was doing is I really believed that it was smart to use other people's money. I really believed that it was smart to spend as much money as you needed to run your business and have a lot of deductions and have no tax bill. I really believe that if we just made more money and doubled sales or tripled sales, that it would result in profit, but it didn't work. And so there was a really dark and stormy and terrible night when my husband came to me and he said, Leanne, I don't understand. How is it that you've made over $1 million and you can't write yourself a paycheck? Help me understand that. And then I had to help him understand that it was worse than he thought, that he had watched me make over $1 million, but what he didn't know is I was hiding a secret and that I had a six-figure line of credit with a bank and I owed an additional $100,000 on top of what we talked through. So it was a come to Jesus moment, I got to tell you. And it was a moment where I had to get really honest with myself, like, how did I get here? And if you want to discuss how I got out of there, we can. But to answer your question, that is how I did that. So I believed those lies, like a lot of business owners believe. And I did all the gimmicks. I talked to people who were smarter than me. I talked to CPAs about how to fix it. And everything that I was told was just make more money and spend less money. That'll fix it. That's not what fixes it. That works in personal finance. It doesn't work in business finance. So again, it's a paradox, but
Wow.
and a really important distinction.
So definitely we are going to kind of unbox this little by little, but it's really, really amazing. And the fact that a whole lot comes in and a whole lot actually went out, and it's crazy, I must say. So you describe that season as nearly costing your business and marriage. How did you find the strength to rebuild?
Okay. These are very emotionally intelligent questions. I found the strength by being honest. Honestly, I had to ask myself, where did $1 million go? And I couldn't answer it, and neither can your audience. Because what happens is you're get busy running a business, you're in the throes of it, you're running your crew, you're running your business, and there's that, especially in America, there's that thought of like, you just got to work harder and make more money, and if you just make more money, your financial problems will go away. And I'd already gone through that process. I'd made more and more and more and more, but it wasn't resulting in profit. And so when you're super busy running a business, you don't have time to think about the numbers or the impact of the numbers. And so when my bookkeeper throughout that time was sending me a profit and loss statement or sending me a balance sheet, I'd look at it and kind of go, all right, okay. And I'd move on with my life and doing more important things. Now, I'm not here to say that your audience needs to become really great at managing a balance sheet or understanding an income statement, but I just kind of acted like everybody else. I'm like, okay, yeah, I got more important things to do. And I moved on. So I found the courage, I found the strength to save my business, save my marriage, and now teach my two number method because of what I did. So what I did is I acknowledged that I didn't know where $1 million or $1.1 million went. And I knew I wouldn't find the information on my profit and loss statement because it doesn't tell you anything. It just tells you you spent
Yeah.
this much on advertising, this much on marketing, this much on payroll. It doesn't tell you anything. It's a rear view mirror. So it's kind of like asking somebody to say, hey, oh, I'm so sorry you got in a car accident. and look behind you and you can see how you got in that car accident. That's never works. You can't figure out how you crashed by looking behind you, right? We have to look ahead to kind of know what's happening. So in my case, I wanted to know, how am I going to find this $1 million? And so I did something very unsexy. I went to the bank and I held my head like this and I said, all right, listen, I need you to give me 12 months of bank statements for all of my business accounts. And so this banker printed them out, and I went back to my house and I sat down and I looked at my finances in a way I'd never had before. And it was with a new mindset because I had to save my marriage and I had to save my business and I had to save my butt, like all of that. I wasn't about to fail in front of the world. So when I started looking at where I spent money year over year, month over month. And as I looked at the individual transactions, I found myself saying, "Oh my word, like at the time, I thought that was a really good investment. But with hindsight, with perspective now, I can see that that was just a waste of money. It was a good idea, but it was a waste of money." And so I got very clear as I looked at my past transaction by transaction that I had really good intentions with my business, but I had some really bad implementation with business money. And that's when I discovered there's a huge difference between actual investment in your business that brings multiple dollars back. Good investments bring multiple dollars back for every dollar spent. But I've been running my business, and I bet your audience is running their business with the thought that everything I spend money on in business is either required or it's a good investment. It's an investment into my business. And so the courage to face it and the courage to fix it came from going, actually, no, not every dollar I spend on my business is a good investment. Sometimes it's flat out a bad investment, and I wish I had my money back, right? And so as I got really clear, I started to see basically that I had good investment in my business because I did have some good. And I also had a ton of waste money that I was like, I want that money back. But now I have to go earn that money again. And so that's when the shift happened. And so the method I teach is called the 2 number method. And I help business owners find out, what are your 2 numbers? What is your good investment and what is your waste? And if you understand those 2 numbers, especially in the trades where we have tons of labor costs, we have tons of costs associated with cost of goods like buying materials, markups, all of those things. There's a complexities in the trades that are there for a consultant, right? So it's really important that business owners know what their 2 numbers are. And once we understand our 2 numbers, then we can boss our cash flow. And that's when profit begins.
Wow, this is really, really amazing. It's the fact that when you make reference of how you get to rebuild, first is owning your mistake and yeah, being very sincere, being very open that, oh, I've gone wrong. And I think that really opened the opportunity to make you to start realizing where did I go wrong. And yeah, I could imagine more like the emotional roller coaster that you've gone through, checking the histories of paycheck on and on, checking. Yeah, it's going to be a whole lot of wow. I think it's more like a clever call that everybody should do that. Being that it's more like an eye opener, being that you get to see a whole lot of things. So you call it the profit paradox. Can you actually
Yeah.
explain what that means and why is it a trap that many businesses out to?
So I think that the profit paradox is just kind of my cheeky way of describing actually the irony. Because a paradox is something that sounds absolutely absurd. It's absurd, but it's true. That's what a paradox is. And so there's some things that sound absurd that are true in business. Personal finance concepts are very different, but one of the things that I think is a huge paradox is when we are accidental entrepreneurs, meaning we didn't go to business school, we just fell into owning a business. When we're accidental entrepreneurs, we try to solve a cash flow problem with personal finance solutions. And the paradox there is that it doesn't work. Basically, I tell people everything you learned about money is bad for your business. Everything that you learned about money is bad for your business. So the 3 paradoxes that your audience will find in our giveaway, our freebie on here, is the first one is spending profit to avoid tax. One of those paradoxes is very clearly ingrained into people. It's almost like I meet people and they don't even know anything about business finance, but what they do know because they've heard is that it's good to have a lot of deductions, but you don't want to pay tax is what everybody believes. Well, that's a paradox because actually it's far better to be profitable on paper. It's profit in the bank account and pay taxes than to have a ton of deductions where you spend all of your money away so that you can avoid paying taxes. It's a paradox. It doesn't make sense to do what everybody thinks you should do. So that's one of the three. Another example is what I already mentioned, that basically people really believe that it's smart to spend a bunch of money and call it an investment in their business. But that's not actually true. Not all investments. The paradox is every dollar you spend out of your business is not necessarily a good investment. It could actually be a very poor investment, but because we're emotionally invested in our business and emotionally tied up in it, we tend to say, okay, I want to justify and I don't want to look stupid. So I protect my bad decision and we don't call it what it is, which is a mistake or just a bad investment. And I think the biggest paradox is that increasing sales does not increase profit. It just doesn't. And so these are some of the profit paradoxes that I help people unpack.
Wow, amazing, amazing. I know you have made reference of this, and I would love you to actually make reference of it again. Many entrepreneurs believe that our increasing revenue will fix everything. Why does that often make the problem worse?
Because that's a really great question. It makes the problem worse because we're focusing on the wrong thing. We're focusing on, it's basically like it's like grabbing a hammer when you need a saw. Like it's the wrong tool. So we have to have the right tool for the job. So when we think in terms of, hey, increasing sales, increasing sales, getting more business, when we're in that energetic flow and that's where our focus is, then all of our money flows that way. And when we don't see it result in more sales, then we find ourselves going, I don't even know what to do except throw more money at it. So what it does is it creates a habit of throwing more money at a problem instead of actually evaluating what the actual problem is. So that's oversimplification, but in the interest of time,
Yeah,
I think that's a good place to start.
yeah, so key. And I think it just speaks volumes. So when a business is a bit profitable and revenue is actually coming in every now and then, it's easier for the entrepreneur to just get blinded about what the problem is and what should be solved. Being that success can actually just be cloud and the fact that everything is going, but definitely at the end of it, nothing is coming out. But being that revenue is coming in, even if there is nothing to account for it, but the fact that it keep coming in can actually more like blindfold our entrepreneurs to believe that they are being successful. And yeah, checking the numbers and a whole lot of our business just keep volume to just speak volume. So you said more like profit is a choice, not an accident. What mindset shift does a business owner need to truly live that out?
What if I told you it's not about a mindset? It's about a do. It's about an action. So I'm going to step away from mindset and say it's not mindset. Like you don't fix this by thinking differently. You fix a profit problem by behaving differently. So what I mean by profit is a choice is one of the paradoxes. This sounds crazy. Is that you get to choose profit. You do. You get to decide that your business is profitable. But what we do instead, what most people business owners believe is like, oh, well, I've increased sales and now I'm going to spend some money and whatever's left over is my profit. That's how businesses run. Even if it doesn't sound intelligent to say that, that's how they do it. And so when I'm working with a business owner and I'm coaching them, I'm like, no, you're actually going to go to a bank and you're going to open an account and you're going to name it profit. And you are going to take money off the top of every dollar you make and I call it sending it to safety, but sending it away. People like Dave Ramsey say you have to give every dollar a job, otherwise it will be spent, right? So what we don't have to do to be profitable to start is saying, okay, I'm taking these dollars off the table. I'm sending them away to safety so that there is profit. And with what I have left after I've done that, now I run my business and I have to make more intelligent decisions about that money. And so it's a discipline. It's a choice. It's a thing you do. It's not a thing that happens. And if you wait for it to happen, You're going to be waiting a long time and you're going to be frustrated. So it's a matter of learning how to do that. And when people know their two numbers, and when they know their two numbers and they run their business the way I teach them, which I'm just going to explain, is you pick up your cell phone, you open your bank app, and you run your business from your bank app with your two numbers. None of this QuickBooks nonsense. I mean, there's a place for it, but business owners won't take the time to do that. So the idea is that I teach people to run their business from a cell phone and a bank app so they can manage their cash flow and let their bookkeeper manage profit and loss statements and those other things. So the idea here is that you actually send money to the places it needs to go, including profit and tax money.
Wow, wow, amazing. That's a lovely approach, and I think it will simplify a whole lot of things. Being that every dollar is being given more like a problem to solve. Other than it, we just leaving it there, and the tendency of just spending it without accounting for it is very, very easy. So, your two numbers meant to simplify business finance drastically. What are those two numbers, and how do you change the way people manage money?
The way we find your two numbers, everybody has two numbers. Now, I'm going to give some caveats because I know that you focus on the trades. So I help people find their two numbers are going to either be good investment. And the definition of good investment is, do I get multiple dollars back for every dollar I spend out of this account? Is it actually a good investment? And so if it's good investment, that's one of the two numbers. And so we add all the good investments up for the business and we say that's your number. So to give you an example, I'm working with a business owner right now whose good investment number is $26,000 every single week. That's what he has to have to run his crew and to do the things he needs to do. That's his number. That's his good investment number. And then we have to find out, all right, how much money is your business wasting? Because every business wastes money. And we're deciding it's not morally wrong. We're not calling it wrong. We're just saying what it is. It's waste. It's money spent on things that are kind of wasteful, but in reality, they're just not good investments. So sometimes my clients will say, I don't want to call it waste because I hate that word. They'll call it BS spending, or they'll call it some other thing. So the idea there is that we find those two numbers, the good investment, and we find the BS spending or the waste amount. And so to use the same example of my last client, his is $6,000 every week that we are saying, yep, that's wasted money. So those are the two numbers. Now, for people in trades, a lot of times there is this process of buying, materials and buying things that we then mark up. And those things tend to fit into something called cost of goods sold. And that's how a bookkeeper would quantify that. And so I like to teach people that like sometimes some businesses need three numbers. And so that third number can also be your cost of goods reinvestment, because I like to teach people to recycle the dollars. So if you build, you built a house for somebody and you spent $40,000 on timber or wood to build that house. Well, we know that $40,000 should have a markup on it of 20 to 30%. But when the client pays you, what we want to do is take that $40,000 and recycle it in the business. So we're using the client's money for the next project to move forward. So I like to help people separate that. And when we get that separate, it gets really clear. And we then don't run into problems of large lines of credit at Home Depot or large lines of credit with our suppliers. So two numbers are basically good investment and waste or BS spending, and maybe cost of goods.
Wow, wow, amazing. Thanks very much for that approach. It just speaks volumes with the application of our these two numbers. It's easier to see where the loophole is, what it up catch, and also what actually more like is running the business down. And this really speaks volume. Thank you, Lane, for sharing. So for someone already in debt or constantly chasing cash flow, how can they use your system to start finding profit immediately?
Great question. So the way you use the system is you have to do something that I call the heartbeat audit. So as just our gift to your audience can go to gift.profitwithleanne.com and there is a paradox workbook to download. And in there, I teach your audience how to do what I call the heartbeat audit. And the heartbeat audit is exactly what I did when I went to Chase Bank with my head hanging low saying, "Can I please have my bank statements?" So the way we can immediately do this is take a look. It's just going to take some honesty, right? And taking a look at our actual bank statement or credit card statement and asking yourself, now that I know what I know, a month later or 2 weeks later, when I look at that expense on my credit card statement or in my bank, would I spend this money again? Now that I know the result, would I spend this money again in a heartbeat? That's why I call it the heartbeat audit. Would I spend this money again in a heartbeat? And if the answer is yes, then it's probably a good investment. If the answer is no, I would not spend this money again in a heartbeat. Example, I had somebody email me and tell me that they did this and they finally took an honest look at their Google pay-per-click ads budget. And when they said to themselves, would I spend this money again in a heartbeat? They found themselves saying no. And at that point, we said, okay, is this going to be something we call waste, where you do it anyway, but it just doesn't bring you money back? Or do you need to get honest and say, it's not a good investment and I'm not going to keep spending this money? Because every time you say, no, I'm not going to do that, you keep that money. The whole core of the 2-number method is I'm teaching you how to keep the money you're making so you don't have to double and triple sales and you don't have
Yeah.
to chase dollars, right? So when we start to keep the money we're making, that's found profit. So in his case, he was spending $3,600 a month on Google ads. And so I just said to him, how about we put that $3,600 in your profit account instead? And he did. So we find that's the first step. There's lots of steps in learning how to kind of navigate and manage cash flow, but that's the first step and it works. If your audience will take the moment, download the workbook, do the exercise, and if they're honest, would I spend this money again in a heartbeat? And if the answer is no, then keep the money in your pocket next month and don't spend it.
Wow, wow. Amazing. 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 I'm just thinking about how the process is going to be especially for someone who has a whole lot of inflow of cash while the business was running and lost a whole lot of them owing to the DK accounts. So going through the heartbeat system is going to inform them that, whoa, I did spend this. Will I do it again? No, I wouldn't. So there's going to be a whole lot of realization while actually going through that blueprint. And this is really amazing, I must say. So you talk about 5 money instincts: the hater, harder, hunter, hero, and the hot shots. What does
Yeah.
this represent, and how do they affect decision making in business?
My, we need a whole podcast for just that one. So when your audience downloads the Profit Paradox workbook, we go in detail through each of these money instincts. And so we won't have time to go through all of them, but I'll talk about 2 of them. And these are really just coming out of my practice. So ever since the day that I saved my business and my marriage, I really started to teach other business owners how my method worked. And so I've worked with thousands and thousands and thousands of business owners. And I can tell you, like, I just see patterns. When you see that many people with all shapes and sizes of businesses, from hairdressers to contractors, right? You see patterns. And so one of the pattern I observed kind of goes back to that initial question we talked about with what did we learn about money from our parents, what was taught and what was caught.
Mm,
And so I started to notice that most business owners have kind of a money personality or a preset belief, and they take that belief and they apply it to their business finances. And sometimes those beliefs are great and they help us, and sometimes they hurt us. So one of those kind of money personalities or instincts is somebody I'm going to call the hater. The hater money instinct is somebody who's really, really uncomfortable with financial conversations. They probably grew up in a family where it was like, don't talk about money. That's dirty. We don't talk about that. We don't talk about what it costs. We don't talk about how much we spend. We don't talk about that. And so that in and of itself isn't wrong. It just means that they hate the conversation about money. And so if they hate the conversation about money, that instinct really truly believes deep down that money might be the root of all evil. And if they talk about money, if they want money, if they have money, if they don't have money. There's all these feelings. Yes, even for guys, even for men, there's feelings that go into this. And so that hater instinct means I'm uncomfortable talking to somebody. I'll give you a real story. I had a guy in my office this week who's a ninja. Like, he is awesome at like tree work. He works with trees. So he's a certified arborist and he's all these things. This man is quintessential. Like, he's the archetype of this personality. And so when we were talking this week, he told me that he went onto somebody's property that required a treatment on 30 different trees. And I was like, how much did you charge for that? And he said, well, I told the guy he could just go to Walmart and buy the stuff and mix it up for $12 instead of treating the trees. So he was so uncomfortable saying, yeah, I treat each tree for $150, which is what we agreed he would charge, right? So that's a great story for what actually happens. We freeze up and we're like, I don't want to tell you how much it costs to work with me. Or we look at the number, like, okay, to build your house, it's going to cost $50 a square foot. And we feel like that number's too big. And so we squish it. Also, that hater instinct is like, well, I have another client right now. Oh my gosh. He will let his clients not pay him for like 120 days. And I'm like, no, like, they owe you money. We need to get the money in the bank, right? So that hater instinct is like, I don't want to talk about how you owe me money. I don't want to talk about how expensive I am. I don't want to raise my prices, even if I have to, even if I'm losing money. So that is one of those instincts. And it's actually really, really, really prominent in men. And one of the other instincts is somebody that I kind of refer to as the hustler. And that hustler is just the guy or the gal who's just like, I'm just going to network. I'm just going to drum up business. I've always got another idea. I've got another idea, another idea. And so they aren't very happy when one business idea isn't working or one idea for how their business should go. They find themselves going, that didn't work. And so they don't give it enough time and they blow it off and they're like, new idea. So they chase and hustle up business all the time. And they're the people who really believe, they're like, yeah, if I could just triple revenue, I'm doing it, then I'm going to be profitable. And it doesn't work. So there's 5 of these instincts that really come from some of that programming we got as children. But also it's a response to living life as a business owner. And when life happens to us and we can't make payroll, that happens. That happens to your clients for sure, your audience, where they're like, oh my gosh, I'm living from one payroll cycle to another. And all I'm worried about is my next payroll cycle. That's really common in the trades. That right there is a symptom of somebody who's maybe got that hustler idea or mentality where it's just like, we got to make enough money to just cover payroll. And that energetic flow in that mindset or in that instinct controls a business checkbook, and it gets a result that at times people don't like. So we fix it. I think it's about acknowledging, oh yeah, I'm like this. Okay, I'm like this. There's strengths and weaknesses to each one of these instincts. And I think it's really great when people walk back into my office and they're like, Leanne, you know I'm like that hater type, and I forgot to read voices. And it's like, okay, I'll help you. Just get out your computer. I'll help you do it. So a long answer to your short question, but there's 3 more that we didn't even touch on today.
Wow, this is really, really amazing. And I think what you're just saying is, I was just reflecting back to how my habits, when it comes to money, have actually been, especially when you make reference of, when it comes to money habits being taught and being caught. And I just discovered that the relationship between money, especially in men, is owing to the fact that a whole lot of them, they are still with the mindset of what they caught from why they were actually growing up, owing to being the head of the home. We don't talk about money because dad hardly talk about it. Nobody ever questioned that how much are you making? How did the money go? How did you spend it? And there was none of those particular conversations. And I think for me, it was even demanding at points when I actually started out. I hardly charged very well. And I have a friend who charged so much. And anytime he charged so much, I'm like, I feel so guilty sometimes. I'm like, oh, how you do that? So like, he almost charged like 2 or 3 times of what I charge. I'll be like, wow, but how do you put that through? And he would do that with a smiling face, and the person will just be willing to pay. I'm like, I don't think I can do that.
Yeah.
But it's really amazing. You make reference always the fact that being that the relationship with money is not that very good. We think we have more like a good money mindset, not knowing that we're actually approaching it from the hater's perspective, which actually more like sometimes even block the roadmap towards saying, what should I learn different that is going to kind of make one better? And the fact that you make reference of the hustling, so we speak for Leon to most what most family are into more like just filling one bill, running to put another bill, another bill, another bill, and it keep running more like a cycle thing. All the children grow up and they take the same mindset. So this is really lovely of actually more like analyzing. Definitely we'll dive into the others, but let's handle this other question first. So, what role does shame play in how people handle money, and how can they start breaking free from it?
There's so many ways to answer that. I truly believe that if your audience will start to embrace the idea that they're not broken, they're not broken. Like, you're a good business person. You just have some bad ideas about money, and it's okay. You're not broken. And I think that is when, let me just say this. We did a survey, a pretty extensive survey, and we floated words on Instagram and Facebook in the form of ads to see what we could get people to respond to. And it was so that we could understand the heart, like the secret heart behind what people actually think. And we targeted men in particular between the ages of 35 and 55. And we floated these phrases like, I feel like everybody else is better at finance than me. Or the guy in my group, he's a better business owner than me. If my wife really knew how bad it was with my business, she would leave me. Like, we've used all these really emotional terms and we put it out there. And we paid attention to what people clicked on. And what I can say in general is that men, by and large, not always true, but by and large, people in the trades tend to be male. And so I would love to see that flip. I would love to see that flip, but it's by and large true. So that's why I'm bringing this up. By and large, men clicked on the shame statements about their business. I'm ashamed of this. I don't feel good about myself, all these things. And so I know what I talk about is hard to discuss. And so I want to bring grace to the conversation and have your male audience here. You're not broken. You got to start there. You got to believe that you're not broken. You just have maybe some bad ideas about how to handle finances. But if you can build a company, build a house, fix plumbing, do whatever it is that you're so brilliant at, you can learn just a couple things that will shift the financial picture of your life. And it's really a choice. Like, you get to choose to be stuck or you get to choose to grow. And so, from a place of grace, I think my answer to your question is, gentlemen and ladies, believe you're not broken. Let's start there. And if you're ashamed, it's okay. Like, so, when people come to me virtually through Zoom or in my office, I'm like, hey, shame gets checked at the door. Like, we don't do that here. There's no shaming. Like, you get to be okay with some mistakes you made and you get to have help. But you can't get help and you can't change unless you can actually say, this is where I'm at. So that's my encouragement for your audience. You're not broken
Wow,
and you can grow if you want
wow,
to, or you can stay stuck.
amazing, amazing. I think this is really, really lovely. Being that it's yeah, just when you make reference of it, it's yeah, it comes to hear this being that especially men who has been in family where when it comes to money conversations, yeah, it's more of a big shame most times when discussing it, being that it has though more like once you talk about money, you are either hurting their egos and everything. So just make reference of that. Yeah, they aren't broken. Just be good. So yeah, definitely there can be solutions to it. Once they are willing to just. I think most time is because a lot of them are not willing to open up. They are not willing to actually like spill in the fact that there's a problem here, there's an issue. Because definitely once you open up, you find the courage to even strive to actually even come out from it. Compared to when there is no conversation around it, which speak volume to shame. And once you actually speak up, it's easier to just navigate your path and rise again because most of those things were actually caught growing up. Is the reasons most times most entrepreneur does not have a correct basis towards their finances and towards the whole lot of stuff. Yeah, amazing. Thank you so much. Yeah, thank you. So, you have helped thousands of entrepreneurs find hidden profits. What is one of the most surprising way you have seen money hiding in plain sight?
Oh, you ask such good questions. Honestly, you're not gonna like my answer. No, neither is your audience. But it is in your revenue model. Like, how does your business make money? What are you charging? That is where profit is often hiding in plain sight. And there, especially in the political and business and interest rate climate that we're in now, right now in 2025, there's a lot of reticence, like a lot of resistance to, gosh, everything is so expensive. Yes, everything I'm buying is way more expensive. So there's just this fear about price. There's this fear about, should I raise my prices? And if I do, is all my business going to evaporate? And if I don't, am I going to make it? Like there's all of this teeter totter. And so talking about raising prices or talking about getting your prices right, or sometimes it's really just a matter of the way you present your price isn't working and people aren't saying yes to it, right? There's some technique there that is financial strategy that's very much overlooked. And so one way that I find it's actually one of the most difficult things I do with people when they come and say, "All right, Leanne, I need your help." And I am like, I see what it costs you to have this many employees, and I see what it costs you to pay for this fleet of trucks and all these things. We've got to really talk about every part of how you make money. And a lot of times I'm finding that the people are using very simple business models of like, well, I just put like 20% on it. I'm like, that's not working. Where's our deposit? Where's all of these things? And so the answer there is it's often hiding in what you are charging, which is deeply connected to what you think you're worth, what you think
Wow.
you can and you can't charge. So that's where some great, like what we just talked about, that grace and some space to be like, it's okay that you don't know how to do that or you're uncomfortable. Quick story. I had a mentor early in my career, and she was trying to get me to decide how much it costs per hour to work with me as a financial planner. So different than business coach. I have another business as well. And I remember being sick to my stomach. She's like, I want you to call around and I want you to figure out how much it costs to work with attorneys in your town. So I did the homework and I came back to her. And at the time, it was like, gosh, it's like to talk to an attorney, it's about $100 an hour. And she's like, great. So you're easily as professional, easily as educated, and easily as skilled at your trade. So what do you charge per hour? And I was like I want to throw up. And, this is a financial planner person, just like a wee little financial planner straight out of college. And I just so uncomfortable. And it wasn't because I was uncomfortable with money. It was because I wasn't sure I was worth that. I wasn't sure I could look somebody in the eyes and go, hey, Aro, it costs $185 an hour to work with me. I was going to throw up, right? I was freaking out. So what she did is she had me practice. And this is what I did to overcome it. I would go up to anyone. I'd go to church. I'd go to anywhere I could go. And I would say, hey, would you please ask me how much it costs to work with me per hour? And so you'd say, okay, how much does it cost to work with you? And at the time I'd say $120. But it took me having repetition over and over and over and over to the point where I can just go like, yeah, right. Like it's $185 an hour to work with me. So part of how we move through this, like we're afraid to say what we're worth is that we don't believe what we're worth. And
Uh,
sometimes we just have to do the heart stuff, which is the hard stuff. And if your audience is mostly gentlemen, dudes, it's reasonable. It's okay. If you're like, I just don't know that I can charge that. Like, doesn't feel congruent, like I'm gouging people, or I feel like I'm a bad person when I charge that. Those are things that have to be worked through, not in your head by yourself. That needs coaching, guidance, and somebody looking back at you going, you got this. You're doing it. Let open up your software. Let's raise your price. Let's do it. I'll help you. Right. That stuff doesn't tend to get resolved in our hearts alone. It's something where we need outside perspective and help, and somebody saying, you're awesome. You are awesome. And you provide a real service and people will respect you more when you charge appropriately. Otherwise, they're gonna take advantage of you. So you don't want to be Walmart. You don't want to be the Walmart of your service. No, you don't. We want to have reasonable pricing. So I think that's my next layer of encouragement. Like, don't tell yourself that you can fix that problem in your head. You won't. You just won't, because it comes from your self worth.
Wow, wow, amazing! Such an amazing way of actually looking at it, and this really speak volume. And yeah, just having someone who you get to, because I think what really helped me was the fact that that friend of mine that keep charging more than what I usually charge. Just seeing him doing it often and often, it actually more like pushed me to say, wow, I think in fact I even does a better job than beat than him. Why
Yeah.
would I charge? Why would I charge more? Because most time when you have a big job that demand more hands and more like more specific in terms of doing the job correctly, he will invite me over, being that he know that I can do it very well. And I'm like, whoa, why am I charging less? If at the end of the day I'm going to follow him to execute it, and I'm like, I need to start thinking different time. It has really helped me along the way. And you just make reference of it, just speak volume, and the part
Take
of
the risk on
repetition.
yourself. Take the risk on yourself. Just try it. Try it. What's the worst that's gonna happen? Someone's gonna tell you no?
Yeah.
Do it, Aro. You can do this.
Yeah, thank you so much. This is really amazing. Yeah, thank you. It's really be amazing having this conversation, and I'm glad that we're really having it, because even after now, I'm going to review what I charge again, and yeah, because it's really key at the end of the day, not just showing up alone, but at the end of the day, after showing up, there should be something that speaks volumes to it. That okay, from your revenue, from all the accounts, it shows that you show up. Not just you are just showing up just to display energy, but at least there's an evidence of cash that speaks volumes. So yes, I'm doing this. I'm doing this right now, and I'm definitely going to review what I charge again and work towards it. And because sometimes I even discover that even those who even pay well, they even come to respect you more, being that they know that yeah, you wouldn't go for anything lesser. That is really an amazing way of looking at business. Yeah, thank you. So Lynn, tell us more about yourself. How can my audience reach out to you, connect with you, and do business with you?
Oh, thank you for asking. You're so kind. I've mentioned it already, but your audience should definitely grab the profit paradox. It's just going to be solidifying to everything we've said here. So they'll get that at gift.profitwithleanne.com, which I imagine you'll put in the show notes. And that profitwithleanne.com is where anybody can reach out to me, schedule a consultation, or just find out more about what we do and watch stories of other business owners that have worked with me as a coach or gone through my profit lab, which teaches you the 2-number method on demand. So those are some ways that your audience can get in touch with me, either directly or through my team.
Yeah, amazing.
Gift.profitwithleanne.com. Pretty easy.
Definitely. I'm going to include that on the show notes so that my audience can easily reach out and do business with you. And also, I don't know when, but once I share more like a clip of it on various social platform, I'm definitely going to tag you along too.
Perfect.
But yeah, before you go, more like Lane, in terms of your work, what actually inspire you to show up every now and then, and what legacy do you hope to leave behind?
Actually was having a conversation last night about this. And what I want my legacy to be is business owners that went from that made a lot of money to no, we have lots of money in the bank and we're not afraid of our finances anymore. That shift is so transformational. It changes the financial trajectory of your family's life. It changes the financial trajectory of your business, and it really changes you as the business owner when you know that you are not an imposter and that you're running a good business. So for me, that legacy, the thing I want most out of my workday is that transformation from we were making money and not profitable to we're making money and we're stinking rotten profitable. And it changes everything.
Wow, wow, amazing. Thanks a whole lot for this. Yeah, yeah, it is a lot. Yeah. Uh, Leanne, this has been an eye-opening and empowering conversation. I love how you bring compassion and clarity to the topic that intimidates so many entrepreneurs. For our listener, you can, if you are tired, you're tired of the stress that comes with unpredictability incomes, go grab our Leanne's free guide, The Profit Paradox, why everything you learn about money is wrong for business. You can find it in the gift, the profit with Leanne.com. It's a powerful first step towards understanding your numbers and finding hidden profits. As always, if this conversation inspires you, share with other business owner and who need a fresh start, a fresh perspective. Follow the Aro Benaiah Show on Spotify and on YouTube or wherever you listen to podcasts. Remember, success isn't just about working harder. It's about building smarter, healthier business that lasts. I'm your host, Aro Benaiah. Until next time, keep building, keep growing, and keep believing. Once again, it's a pleasure having you, Leanne.